Hello everyone, and welcome back to the Web3 Daily. Today, let's dive into some of the big things happening in our space. It feels like the prices of Bitcoin and Ethereum are just nailed in place, right? The volatility is so low, it's almost putting me to sleep. The entire market seems to be holding its breath, just waiting for a clear signal out of the US. Is the rate cut party going to continue, or should we be getting ready for winter? Honestly, this market is a bit of a grind. I took a look at the data, and Bitcoin is just hovering around the 114.0 mark, with Ethereum chilling at about 4,300. They can't seem to break up, but they're not really falling either. This kind of market really tests your patience. Both the bulls and the bears are waiting for a sign, just to see who blinks first. Seriously, chasing pumps or panic selling in this environment is pretty risky. Maybe the best move right now is to just watch and wait. I know there's a pretty interesting topic I want to get into today, and it's all about the big names in our circle, the KOLs as we call them. Have you noticed a shift in the vibe lately? It used to be that we'd follow certain key figures because they genuinely had something to offer unique insights, the ability to unearth solid projects, and now I get the feeling that the title of influencer has become more important than having actual influence. It's just a constant barrage of promotions and project shilling, and half the time, you can't tell if they genuinely believe in it or if they're just getting paid to say they do. When I see this happening, I have some mixed feelings. On one hand, projects need marketing, and the KOLs need to make a living, which seems fair enough. But on the other hand, when shading becomes an assembly line job, the risk for those of us following along gets incredibly high. Plus, with on-chain tools like Arkham getting more and more powerful, a lot of these operations can be exposed down to the last detail. It's bringing things that used to happen behind the scenes right out into the open. Who's secretly dumping their bags? Who has a shady deal with the project team? It's getting harder to hide. This level of transparency, I don't know if you feel it too, is actually reshaping the trust system of the entire space. A lot of the big shots we used to look up to might be seeing their reputations crumble a bit, but I don't think that's a bad thing. It's like a filter, weeding out the people who are just here for a quick cash grab. It just means that during this process, we all might need to relearn who's actually worth listening to and who we can really trust. Alright, let's get into the first major story of the day. And speaking of meme coins, especially Dogecoin, Wall Street just made a pretty big move. The first ever US Dogecoin ETF is officially set to start trading with the ticker DOGE. The firms behind this are Rex Shares and Osprey Funds. When I first saw this news, my immediate thought was, how did this get approved? I mean, as we all know, the SEC has been stonewalling pretty much every spot ETF that isn't Bitcoin or Ethereum. But then I dug in a bit and found the clever workaround. This Dogecoin ETF didn't go the familiar route of the spot Bitcoin ETFs under the 33 Act. Instead, it was structured under the 40 Act framework. In simple terms, it uses a subsidiary in the Cayman Islands to hold the Dogecoin directly, sidestepping the whole spot approval bottleneck. It's a pretty slick move, honestly. Analysts over at Bloomberg even commented that this is the first ETF designed to hold something that has no utility on purpose, which is a spot-on description. This isn't just a milestone for Dogecoin, it might have just opened up a new roundabout path for other altcoins to make their way into mainstream finance. We just talked about the slick maneuver that got the Dogecoin ETF listed, but on the flip side, it's a different story for those trying to walk through the front door. The SEC has made its move again, pushing back the decision deadlines for several spot ETFs, specifically for coins like Solana and XRP. The applicants who got delayed are big players too, including firms like 21 Shares, Bitwise, and Grayscale. The SEC's official reason is the usual. They need more time for review. But everyone in the space knows what that really means. The core issue remains stuck on the legal classification of these altcoins. Are they securities or not? The SEC still hasn't given a straight answer. So you see the contrast here. On one hand, Dogecoin found a clever structural loophole to break through. On the other hand, coins like Solana and XRP, which are trying to gain the same legitimate status as Bitcoin, are still facing a massive uphill battle. With this move, the SEC is basically drawing a line in the sand for the market. Aside from the two star pupils, Bitcoin and Ethereum, who already have futures ETFs, the path for any other coin to get a spot ETF approved is going to be a long and grueling wait. Okay, after covering the macro level stuff like ETFs, let's bring our focus back on chain and look at some major news from the L2 space. Consensys, the parent company of MetaMask, has finally launched the token for its incubated L2 network, Linea, and it came with a massive airdrop. I know a lot of you have probably been grinding for this, interacting with the network to farm those LXP points. Well, the moment of truth has finally arrived. The scale of this airdrop is pretty huge, with billions of tokens being distributed to over 700 zero-wallet addresses. One thing I think is noteworthy about Linea's token distribution is their claim that the initial airdrop has no allocation for VCs or the team. That's pretty rare for projects these days and shows they're giving a serious nod to the community. The whole process wasn't entirely smooth sailing though. Right before the token generation event, the network experienced a brief outage. It was fixed quickly, but it definitely had people on edge for a moment. Overall, as a star L2 with the backing of a giant like Consensys, Linea's official launch is set to seriously heat up the competition in the L2 arena. Alright, after diving into project level updates, let's zoom out to the national stage and check out some new regulatory developments. This time, we've got some positive news coming out of South Korea. The South Korean government is preparing to grant domestic crypto companies an official designation as venture companies. Now, don't underestimate this title. It comes with some serious, tangible support. When certified as a venture company, these firms will be eligible for corporate and income tax reductions of up to 50%. On top of that, they'll gain easier access to institutional funding and various government subsidies. For a startup, this is basically a massive growth package being handed to them on a silver platter. The most interesting part of all this is that it marks a complete 180-degree turn in South Korea's regulatory stance. You have to remember, back in 2018, the country classified the crypto industry as speculative and explicitly excluded it from any kind of support. Now, the new administration has clearly had a change of heart. They want to lure back the Web3 talent and projects that have left and are getting serious about building a domestic crypto hub. Okay, moving on from policy to some hardcore tech news. For any public chain ecosystem, technical stability and security are its absolute lifelines. And recently, Polygon was put to the test. The network had to execute an emergency hard fork a few days ago. The reason, a consensus bug popped up that was knocking some validator nodes offline. The most direct impact for users was that transaction finality times slowed to a crawl. I'm sure if you were using Polygon during that period, you felt it. You'd send a transaction, and it would take forever to get confirmed, which is just a terrible user experience. The Polygon team was quick to react though. They rapidly identified the problem, which was a faulty milestone proposal between their Bohr and Heimdall layers. They then rolled out a mandatory software update, requiring all node operators to upgrade. I think you have to look at this from two angles. On one hand, it definitely exposes the fact that even a top-tier network like Polygon still has inherent technical risks. But on the other hand, the team's ability to respond quickly and successfully resolve the issue with a hard fork is a testament to the ecosystem's emergency response capabilities and technical resilience. Okay, moving on from base layer tech issues, let's talk about risk management in the staking sector. Recently, Kiln, a pretty significant staking platform on Ethereum, made a very decisive move. They voluntarily exited some of the Ethereum validators they operate. The reason behind this move is a direct response to the recent hack of Swissborg, which resulted in a 40 million loss. Now, to be clear, Kiln itself was not hacked. They took this action purely as a defensive measure to proactively mitigate risk. This incident really shines a light on a very real issue in the staking space: risk contagion. When one major platform suffers a breach, other platforms, to protect themselves, might choose to scale back their operations and reduce their own risk exposure. Kill's move, while it might impact some of their business, also shows that the industry is maturing and becoming more cautious in the long run. It's a stark reminder for all of us that when choosing a staking service, the platform's security and risk management capabilities are likely far more important than just the APY they're offering. Alright, that's all for today's Web3 Daily Report. If you found this helpful, please remember to hit that like button to show your support. Every day, we're here, sorting through the noise to bring you the most critical and wealth-relevant information in the Web3 world. Our hope is that by curating this content, we can help you make more rational and informed decisions on your Web3 investment journey. Also, I've prepared exclusive registration links for major exchanges in the comment section below. These are special high rebate offers we've secured for our followers, and we hope they can help you save on some costs along the way. Let's all stay rational, move forward steadily, and grow our wealth together in the world of Web3. May all of your crypto assets see steady growth. We'll see you again tomorrow.